In this episode, we discuss the 5 biggest mistakes that beginners make in the stock market. Hey everybody, I'm Mike Desepoli and this is episode 23 of the Ask the Advisor show. Today we're talking about the 5 biggest mistakes that beginning investors make in the stock market. You know, we've met a lot of investors through the years of our work, and we've developed a list of the do's and don'ts for beginners just getting into the markets for the first time. So the first mistake and the biggest mistake that we see people make, the most common, with investing when they're brand new, is thinking that it's going to be easy. It's not easy to succeed at investing. It takes hard work, it takes patience, and it takes at least a basic general knowledge to know what the heck you're doing. And if you're putting your own money at risk, you want to make sure that you do so diligently, okay? So we all know somebody that has a story about that hot stock that they bought that took off and they made all this money, and for every one story like that, there's 5 stories of somebody that lost money in the market. So you want to make sure you understand when you get involved with investing, it is not easy, it will take time to succeed, and it will take patience for sure. The second biggest mistake that we see people make is listening to other people too much. We all have an uncle or a cousin that want to give us investing advice about, you know, the latest hot stock or whatever it may be, and that is very dangerous. If you're a new investor, you want to get a basic general knowledge of the markets, understand what you're investing in. Okay, that's a side tip. Don't ever invest in something that you don't understand. If you're investing in a company, you should be able to explain what they do or what product or service that they sell. If you can't answer those questions, keep your money out of that company because you're basically investing blindly. But anyway, back onto the point of listening to others too much. It can be dangerous if you take advice from too many different sources. And really the media falls right into this as well. If you watch too much TV, you know, CNN, Bloomberg, Mad Money, it can be very cloudy and it can make very blurry your investment strategy. So don't listen to too many sources. Understand yourself, understand how much risk you want to take, and invest in companies that you know and understand. The third mistake that beginning investors make is getting too caught up in the short-term fluctuations of the market. This kind of goes back to number 1 and thinking it's easy. But if you get a basic general knowledge of the markets, you have to understand as an investor that the market will have its fluctuations. Sometimes the market will move quickly to the upside, other times it moves quickly to the downside. And you have to be aware of that and be accepting of that before you decide to invest in the stock market. These short-term fluctuations are nothing but noise and a distraction. And if you're focusing too much on those individual moves, you're going to deviate from your long-term investment strategy and it's going to throw you off course. So again, I believe in investing for the long term. Now, if you're a day trader, your strategy will be totally different. You will be concerned with short-term fluctuations. But for my investment beliefs and for the people that we serve, we believe in investing for the long term. And quite honestly, we don't even care about these short-term fluctuations when you have a long-term focus. Okay, if you believe in the future of a company or the future growth of the economy, you really shouldn't be concerned with the day in and day out fluctuations of the stock market. The fourth mistake that beginning investors make, and really many investors make this mistake, not just beginners, is getting too emotionally attached to an investment. And really, usually this happens with an investment that we make in a product or service that we just feel we understand it so well and it's got to do well, and how could it not? Or a stock that you bought, or mutual fund, whatever it may be, that did a phenomenal performance for you, and now it's time to possibly sell that, but you've become too emotionally attached because that stock has done so well for you and you really don't want to let it go. That's a very dangerous approach in investing. Okay, we have a saying that you never go broke taking a profit. So if you have an investment that's done well for you over the long haul and you think that it might be time to move on, or if you're working with a professional that's advising you that it's time that you sell that investment and move on, heed that advice. Do not become too emotionally attached. And really the same is true on the other side. If you buy a company that you believe in and the stock is performing poorly and it's not working out, don't ignore the signs, okay? Don't become too attached to a product or service just because you use it. All right, the market will tell you what the facts are. Pay attention to those and don't get too emotionally attached. And the fifth mistake that we see investors make, particularly beginners, is getting too caught up in news headlines and getting too caught up in the political spectrum and the headlines that come out of that. Okay, I got news for you guys. It doesn't matter who the president of the United States is. The stock market will do its thing. American companies will do their thing over time. All right, nobody even knows this fact. Most people don't know this fact. If you go back through history and look at all the U.S. presidents and the stock market performance under each, okay, the best annualized performance was under the president who was not elected, and that was Gerald Ford. Okay, so whether it's a Democrat or Republican, America will continue to grow and prosper, and you need to have a long-term investment focus, and you need to stick with your plan and let your investments do their thing. Don't get caught up in the news that's coming out of Washington, D.C., or any of the other news headlines from the local networks that are pushing fear and uncertainty in the marketplace. It's always good to be well informed. We're not saying turn a blind eye. Be well informed, but don't let that drive your investment strategy. So those are the 5 biggest mistakes that we see beginning investors make. We hope you guys find those useful. And we hope you subscribe to the channel. We're always talking finance, entrepreneurship, things like that. A lot of helpful tips we put out. We'd love for you to subscribe, stay in tune with us. Visit our YouTube channel, click that button there on the bottom right-hand side of the screen. If you're viewing this video on Facebook and you like what you saw, please give us a thumbs up, throw us a like. We'd love to know how you guys are finding these videos and what type of feedback. Any feedback that we can get from you would be much appreciated. If you're on Twitter and you want to send us a question, use the hashtag #AskTheAdvisor. Any question that you have in the investment or finance community, we'd be happy to answer that to you, for you rather. Before we go here, we have one question today that came in last week on Twitter from @DJRee. The question was, are you able to contribute towards an IRA, a simple IRA that is, outside of your paycheck? Well, unfortunately, DJ Ree, the answer to that question is no, you are not. Okay, a simple IRA is a workplace attached retirement plan. Therefore, you have to contribute through salary deductions because that plan and the money you put into it is based upon your salary. There are other types of IRAs like traditional IRA, Roth IRA that are available for you outside of what you do at work. So maybe that's something that you want to discuss with your local finance professional. Thanks so much for tuning in, guys. Subscribe to us on YouTube, like us on Facebook, visit us on Instagram, www.instagram.com/AskTheAdvisor, and keep an eye out next week. Our episode will be coming to you from Las Vegas, Nevada. Thanks for watching. See you next time.